Thank you, Asha. Good afternoon to everyone present in this call. ICICI Securities welcomes you all to the Q1 FY21 earnings call of V-Guard. From the management, we have with us today Mr. Mithun Chittalapalli, MD, Mr. Ramchandran, Director and Chief Operating Officer, Mr. Sudarshan Kasturi, Senior VP and CFO. I now hand over the call to management for their opening remarks, post which you can take a question from the participants. Over to you, sir.
Thank you, Hitesh and ICICI Securities for hosting this call. A very warm welcome to everyone present, and thank you very much for joining us today to discuss the operating and financial performance of our company for the first quarter ended 30th June 2020. During Q1 FY21, revenues declined by 42% YOY to 406 crore. Non-South markets declined by 47%, while South declined by 38%. Non-South markets saw a larger impact due to more extended lockdowns, whereas opening up in South saw progressively improved demand in states such as Karnataka and Kerala. Similarly, all three product segments were impacted in the quarter, marked by various stages of lockdown and disruptions. While electrical products were the least impacted, electronic segment saw a sharper decline based on its linkage with larger appliances, which sees large demands in summer season like ACs. Gross margins contracted by 334 basis points YOY to 29.2%, owing to lower capacity utilization and product mix. However, gross margin improved in each successive month and had reverted back to normative levels in June. EBITDA margin for the quarter was 2.2% as compared to 10.2% YOY due to decline in turnover. Profit after tax during the quarter was accordingly subdued at 3.6 crore. PAT margin contracted to 0.9% as against 7.5% in Q1 last year. While these headline numbers indicate the effect of COVID-19 pandemic along the expected lines, we believe the business has demonstrated strong resilience in facing these extremely challenging times. We have put in place cost containment measures which will partly offset the impact of loss of turnover. Working capital has improved steadily as available inventory has been used to drive revenues. Collections were strong and we have been able to reduce our debtor days, resulting in a total cash generation of 215 crore during the quarter. Even before COVID-19 pandemic, there was weakness in consumer demand based on conditions of tight liquidity and reduced discretionary spending. FY21 had opened in difficult circumstances, but we believe that the situation reverts to greater normalcy. We have the requisite framework to drive volume growth momentum by expanding further into non-South markets, introducing new and innovative products and entering additional product categories. We have put in place best-in-class processes and systems to future-proof the organization and create the framework for a secular growth. We will continue to build upon our competitive positioning in the consumer electricals, electronics and consumer durable industry to drive value for all stakeholders. On that note, I would like to thank you once again for your participation and would like to hand over the floor to the moderator for question and answers. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use hand.
Hello. Hello. Hello.
Yeah, Mithun.
Yeah, I don't know what's going on. Anyway, we'll hold.
Yeah, you don't hear anything, do you?
I think we are out of the call, I think maybe. I don't know. We'll just hold and see. Let them call.
Ravi, your line is in talk mode. You can go ahead, please.
Hello.
Hi, sir. Yes, hi. Yes, please go ahead.
Yeah. Sir, just wanted to check with you in terms of demand from metro and non-metro, how different has it been for across the products? And second question is with respect to July demand, how it is panning out?
Ram, you want to take this one?
Yeah. I think the non-metros have been better than metros. I think metros are impacted for various reasons. So, I mean, that's the first question. Non-metros have been better than metros. Also, I think that, the early part of the lockdown, the non-metros have been operational, formally, informally also, it looks like, based on, the inventory level and the uptake that we have been able to observe. Yeah. Coming to July, I think July is, comparable to June. A bit better actually, but what has happened is, after about 12th or 13th, right, many areas have gone into lockdown. So as an example, let us say that, around, 75-76% of the outlets that we serve were open at the beginning of the month, and, that had dropped to about 55, 54 by around 17th, 18th, yeah. And this has now recovered around 23rd, 24th to something like I would say closer to 70%. Yeah. So that basically happened because many places progressively got added into the lockdown, right? Like Karnataka went in as an example, or some parts of Maharashtra. So it's a very dynamic situation, and even the outlet numbers are changing week on week and month on month. Yeah.
Got it, sir. And in terms of cost wise, so basically, we had seen employee cost drop by around 10%. So is it like, was it a salary cut or something which we have given to employees, or and how should we look at employee cost for the year?
So that's not. Yeah. So that's, you want to go for this?
Yeah. Okay. Yeah, we've not resorted to any salary cuts or whatever. We are paying both on-roll employees and contract labor. On a full year basis, again, I mean, that call we will take perhaps in 6 months or 8 months. For now, we have held on to the increments, so there's been no cost increase. Therefore, it is flat. We will review the situation later and see if we decide to give an increment or not. So we'll know
the reduction could be because we are not paying variable pay because our targets are not getting achieved.
Yeah. Got it, sir. Got it. And in terms of ad spends also, how is it likely to pan out? Usually we spend around 3-4% of top line also. So.
See, the business is not back to normal. Even today, like Ram mentioned, we are serving only 70% of customers. So when business goes to normal, at that time we will review this. But as of now, we are not planning to spend. I mean, it's like bare minimum, as you can see, ad spend. And I guess it will be very similar kind of strategy taken by all peers.
Just one more point. The supply side is also very dynamic, right? So, different areas get into containment zones, so different suppliers or supply sources can get impacted. And also, the attendance is, thin and weak, generally operating between 50 to 70% at these places. So I think, I think marketers will take some more time before they open their purse because, supply has to be streamlined also.
Got it, sir. And my last question is with respect to commodity prices, them softening, will it be a big advantage to us in terms of gross margins and all these things?
I don't think commodity prices have softened. Specifically, if you ask, copper actually has shot up by close to, I don't know if I'm right on this figure, but about 20%. 20% increase in copper has happened. Plastic prices have come down, but unfortunately, when the prices were at its lowest, we were not able to buy anything because of the lockdown. Sudarshan, you want to just explain this?
No, it's clear. The copper prices have gone up, and that sort of gets reflected in the wire selling price. Okay. I mean, it's not much of an impact. The other they don't make too much of an impact.
We have not seen huge reduction in commodity prices vis-a-vis, let's take Jan or Feb in other materials.
Yeah. Got it, sir. Got it, sir. Yeah, thanks a lot for the answer.
Thank you. We would request the participants to please press star and one to ask a question. The next question is from the line of Renu Baid from IIFL. Please go ahead.
Just to understand a bit more on the inventory side, you mentioned that the company has pretty much used the inventory which it had to drive revenues. So how would be the inventory across the channel partners also? And have we seen the channel partners starting to upstock again, or they continue to remain a bit more averse on the pre-stocking trends?
Ram, you want to take this?
Yeah. Channel partners today, I mean, inventory is, what I would say, inventory has normalized. I would say a little lower than normal. I think on an average, what we are observing is, inventory would be down to about 30 days, including, we are looking at I'm talking about a total channel inventory, which is a bit lower than normal because, this includes the direct and indirect. So, yes, there is, they are, thinner than, what they would be before. But I think this is also how they are operating now compared to the way they were operating before.
Sure. So based on the feelers that you have from the market in terms of consumption patterns, what is the expectation of we getting back to normalized 100% levels as last year? Should festive season be the next catalyst for demand to pick up, or do you think the demand trends have been much more significantly impacted from a medium-term perspective?
See, I think we are in a position where we are not able to predict. Please understand this is a health issue, so without a health solution, really neither me or Ram or Sudarshan will be able to give you an answer on this. It is really depends on, when the country is able to tide over this crisis together and the markets one by one can open fully. Every day, every district is a different case, so it's very volatile in that sense. So it is very difficult to make any kind of prediction. Ram, you want to add anything to this?
No, I just wanted to say the same thing. For example, we started this month and, we were feeling that, it would go well. And then, one by one, the lockdowns started to get announced and, the number of outlets that we could, to which we could supply, shrunk by 30 odd percent, right? And then, now we are seeing from 23, 24, the outlets are coming back, right? And we can see the consequence of that directly, in numbers coming through, yeah. So I think.
So what I was also trying to ask was that probably in the next couple of months or by the end of 2Q, if the situation normalizes.
That's what Mithun was saying, right? See, it all depends because, both the supply side and demand side, picture is changing from time to time because it's not only a matter of demand, right? It's also a matter of supply.
So I think I'll just supplement this. See, Kerala had the best way of managing COVID in the beginning part of this pandemic. Okay. But right now we are hitting 1,500 cases a day. What it means is that no state can effectively manage this. So whenever the cases go up, they will lock it down and then they will restart again from zero. So this process is going to continue over and over again till we have a vaccine. That's what I think. So we can't really comment when we will go back to 100%.
Sure. But in general, what has been the feedback or inputs in terms of the demand pattern, both from secondary as well as tertiary sales? Have they also moved in line or how is it?
Yeah, so wherever markets are opening and cases are relatively lower and people are feeling relatively safe to come out, the sales are happening. So that is definitely there. We can't really split this between what is the pent-up demand and what is the real demand. Okay, that split up none of us have. But what we can safely say is that 70 to 80% of last year's sale should happen, provided we don't have a nationwide lockdown. This is what we believe. 70. So that's the broad number I can say. It can go up, provided there are no, localized lockdowns and stuff like that. It's really difficult to say. I mean, we really can't give you any guidance. That's the honest truth.
Sure. So I have a couple of more questions. I'll get back in the queue. Thank you.
Thank you. The next question is from the line of Sonali Salgaonkar from Jefferies India. Please go ahead.
Good afternoon. Thank you for the opportunity. So my first question is regarding the unfavorable product mix that you have mentioned in the presentation. Any more color you would like to add as to which appliances, have led to the maximum impact on our gross margins?
So if you look at the stabilizer business is the most impacted because in Q1 we typically sell air conditioner stabilizers and that pretty much has not happened. So they have taken the biggest hit and it is a product with higher gross margin. So it has definitely pulled down overall gross margin for the company. This has been one of the biggest impacts.
Understand. My second question is, I understand that there's a lot of uncertainty in the overall demand and the business scenario, but any rough EBITDA margin you would like to point out as to what we should expect in FY21, any range, considering that the first quarter was quite lower than what we generally register?
See, I think what we've seen is that we have given in the analyst presentation month-wise gross margin for April, May and June. So that gives you some color that, at that kind of a revenue in June what we did, that kind of a gross margin is possible. That's all I can say as of now. Sudarshan, you want to add anything to this?
Yeah, that's all. I think if we are able to sell maybe 80 to 90% of last year, margins will look like that. That's the best we can.
So I think if you are able to do 80 to 90% of last year, we could hit 9 to 10%, between 8 to 10% EBITDA margins, correct?
Yeah, something like that. Yeah.
Something like that. But that's all we can say.
Understand. So in our factories right now, what kind of utilization are we operating at?
Ram, you want to take this?
Yeah, I think wire factories are, running, full steam. So the electrical categories are having good demand, right? As I think Mithun outlined in his statement. So there, the capacity utilization is, very good. Yeah. And, in the other cases, the, utilization is in line with, normal business requirement at this stage. Because what we did is, our focus initially in the first 2 months was to go, make sure that, we collect all the monies and, our cash position gets better. So our focus, I would say in May and June was primarily towards, collections and, and that we have been able to get to a reasonably decent place. So, and mostly therefore, we have focused on, utilizing the, available inventory on hand, and, our factories have started, somewhere around middle of June, barring the wire factory. So, so what I would say, June, July, their run should be, okay. It should not be an issue. Yeah.
So we are basically supplying to whatever demand that is there. We are not going to produce and then force the sales team to sell. So that's what I think the basic point is.
Thank you. Sonali, we would request you to please come back to the question queue for any follow-up questions as we have several participants waiting for their turn. Also, we would request the participants to please limit their questions to 2 per participant. The next question is from the line of Achal Dohade from JM Financial. Please go ahead.
Yeah, thank you for the opportunity. My first question was with respect to, in terms of the demand pattern, are you seeing any down trading in general in the industry as well as for our product? And 2, are you also seeing any disruption at the in the unorganized industry?
So as of now, we can't get any clear trends on down trading. Like Ram mentioned, one of the products that is selling very well is wires, where we only have really 1 or 2 SKUs in terms of pricing positioning. So really we can't measure that. We have not seen that premium product is not selling and non-premium product is selling. We have not seen that kind of a trend. Sales are secular in that sense. I think we have to understand that what's right now happening is a pull demand. That means actually retailers and distributors are calling us for stocks and then we are supplying. We are not shoving anything down the pipe or channel. So what we believe is, what we are supplying to is kind of like the normative demand. That is the first part of the question. So no, we don't have any evidence of down trading as yet. What was the second one?
With respect to the unorganized industry?
Yes, in the case of wires and cables, definitely we are feeling that there is an absence of the unorganized industry and definitely all the brands are benefiting as of now. Yes, that evidence is there.
In the other product categories, sir?
No evidence.
No, got it. And the second question was with respect to the debtors. I see that QOQ we have seen a reduction in the inventory. Can you help us with the channel financing which was as of March 20 and June 20? Could you please help us with that?
Sudarshan? Between March and June, there's not much difference. It's about the same.
Would you be able to help us with the quantum, sir?
The reduction in debtors is an actual reduction in debtors, not because of channel financing, if that's what you're
Correct.
I think it's an actual reduction in debtors.
Yeah.
Sure. Would you be able to give the quantum of what is the channel financing outstanding as of June?
The outstanding?
Rather, channel financing done as of 30th of June?
What is the total book of channel finance?
Total outstanding will be about 80 or 90 crores.
Got it. Great, sir. I'll come back in the queue for further follow-up. Thank you.
Thank you. The next question is from the line of Mayank Bhandari from BNP Securities. Please go ahead.
Yeah, thanks for the opportunity. Sir, I wanted to understand particularly the consumer durable. How has been the growth in different categories like fans, kitchen appliances, and considering that we have a low base, the growth looks, this is a pretty sharp degrowth given that other competitors have given good commentary in terms of kitchen appliances, air coolers, and fans.
Ram, you want to take this?
Yeah. I think, we, as Nitin said, we are not, aggressively pushing numbers into trade at this time. We are just feeding, whatever demand is coming from the market. Yeah. And, across channels, our inventory is a little lower than desirable in our key markets, yeah, particularly South. Yeah. So that's the situation. Second thing is, yes, we are, you will generally see a trend in this environment that, what I would say as leading brands and, brands with, width and depth of distribution will have some advantage over other brands. That's the second point. The third point we want to make is by and large, our performance is similar to others. Maybe it's possible to see the weightage of e-commerce in some of our newer categories is not, comparable, as they are slower to enter e-commerce compared to, let's say, a fertilizer or water heater. So I think whereas in some of the players where you might have sensed better demand in kitchen and all, they have a stronger presence in e-commerce. Also, kitchen and all as a category also has a stronger presence in organized retail also. Okay. So I think those influences are also there, yeah, in the overall number. Yeah. But I think by and large we will not be way off.
Okay. And sir, any other cost-saving initiatives apart from the employee cost and the advertisement expense?
No, by and large, like anybody and everybody in the marketplace, right? The cost sets are same, across companies, yeah. And we are focusing on these cost sets, whether it is, what I would say, establishment costs like rent, travel, yeah, or whether it is, what I would say as people and stuff like that. And but there are discretionary in nature. So whatever is discretionary in nature, we are tackling. Yeah.
Okay. And lastly, sir, what would be the capex? Any guidance for capex this year?
Sudarshan, this year capex.
Yeah, you see, right now, other than essential capex, things are on hold. We've got a couple of plans to finish. There is not too much of outstanding things left. Other than certain IT, infra and things like that, we don't see much capex happening at least.
We may have a capex for a wire plant, which is about 15 to 20 crore, and then probably another 10 crore of IT and all this. Maybe 35 crore of capex could happen at the max.
Okay. Thanks for the opportunity.
Thank you. The next question is from the line of Bhavin A from SBI Mutual Fund. Please go ahead.
Thank you for the opportunity.
So, Mithun, just one question from my side. Given the current pandemic, what is it that you are doing differently which will help the company improve more on a structural basis? And if you could, it will be interesting if you could talk about the investment that you will be doing in terms of people, which will be difficult to hire in other circumstances, or the investment in research or development, innovation. Will be helpful to know your thoughts on this.
So we were working on a digital workplace. As a concept started from 2 years back. So we started with a world-class VC system. We started with a world-class integration of VC system with Teams, Microsoft Teams. Then we invested in something called Degrade, which is a learning platform which can be used for both company created content and external paid content as the manager so wishes. So we have invested a lot of tech, not knowing that this pandemic is coming in our way, and now we are actually using a lot of that. We have constant training programs for not only our own employees but even for key channel partners and their staff on how to sell a particular product to customer, technical selling. So we are using this time to beef up, those kind of activities because there is absolutely no, visibility on when, people can go visit the market, whether it's safe to visit the market and all that. So all the work is done over phones and, video conferencing. So I think we will probably accelerate that journey into a digital enterprise a little faster. I mean, we had put some milestones, but COVID has forced us to, fast track some of those milestones. This is one side. In terms of people hiring, I think from 2015 to 2020, we have hired quite a lot of people, and you will see our ballooning of employee costs that has happened. So I don't think we need to hire any more key resource. Not a lot of people and positions are left to be filled, in my view. There are very few and far between, which when we find the right resource, we will take them on board. The second is on e-commerce. We started the journey on e-commerce 2 years back, and now we are getting very good traction. Our margins on e-commerce are far superior than what we do in any other channel, and it's growing very, very fast. And we have even launched certain products where e-commerce is the first channel of choice, and we only will launch them in offline much later. So all these experiments are working well. I will also ask Ram to supplement any more to these.
So actually, we've been having a long-term journey for organizational capability building. Much of the focus, the last 5 years have been on the supply side. And mainly, we've been working on cost. We've been working on insourcing manufacturing. And we have also been working on working capital. So that's been our work, and there are some proofs related to that which we should be able to capture over a period of time. But more than the financial benefit, or the capability that is getting built, these are also built on a robust digital friendly what I would say is tech ecosystem. So I think that a lot of focus in V-Guard has been on this over the last 5 years, and which I think maybe another year or two we will continue, so that our work on the supply side will be complete and comprehensive. We have commenced work on the market side, fundamentally to help us to build leading capability on the market side, where we are trying to embrace technology into our what I would say marketing process. And this work is just we started about 6 months back before the lockdown has started. That's something that we will continue over the next 3 to 4 years. These are like long-term journey. And fundamentally, what this journey is doing is, helping us to leapfrog our capability, whether it's manufacturing, whether it is product, whether it is go-to-market. It's fundamentally, building, leading capabilities in this area.
And also what it is doing is, this is all being, accompanied with a roadmap for, the enterprise digitization, which Mithun was, earlier referring to. Yeah? The near-term benefit of enterprise digitization is basically connecting the organization for employee productivity, which I think he outlined, and the long-term benefit is related to some of the areas that I've talked about. So we have a pretty robust program. I mean, this is a program which has been on for the last 4 to 5 years, and we have a roadmap for the next 3 to 4 years. And, we are busy focusing on that, and we are busy putting that in place.
Yes, thank you so much for a elaborate answer. Much really appreciate it.
Thank you. The next question is from the line of Akshay Bhor from Premji Invest. Please go ahead.
Hi team, thanks for taking my questions. I actually want to understand a little bit on the historical performance. If I look at pre-COVID, about 4 to 6 quarters, the performance has been slightly tepid, both as compared to your own historical performance and then even with respect to peers as well. And this is in light of very good summers last year, should have been favorable to some of the portfolio, and then winters as well. So just wanted to understand what is it that is kind of how can we attribute this underperformance to, what can we attribute and within that specifically, is there any component of newer competitors that are coming into especially in the Kerala market that is pointed out sometime in the past? Any color would be helpful. Thanks.
So see, what has been happening is, I think post Demon and GST, the market growth had slowed down significantly for all players. So every company in India was getting into every product category, and we also got hit in that mishmash wherein which maybe 20-30 brands entered water heater business, which is a 1,500 crore category. And then the same thing happened, with even stabilizer. I'm told that Philips also now has stabilizers. People started looking at companies with decent margin and just started entering categories. I should not be talking about it because we have also entered adjacent category. But the thing is, when everyone in the market tries to enter every category, there is going to be a bloodbath, and that you will see not only with us. In time, you will see with other companies as well. So yes, there is a period where we had to, show restraint, not, react by dropping price and all that. We have lost share also, we have lost revenues also, but our margins are intact. I think after 4-5 years, many of these people will leave. I mean, and you will hear about many of these companies getting into trouble also. I don't want to specifically name them, but we have some companies who, into batteries that got into kitchen appliances, that got into trouble. So stuff like that keeps happening. So we can't really stop, competition. It's a free country. Anyone can do pretty much anything. So we're not really 1 or 2 quarters. But if you look at the last 5 years, we have worked significantly to improve our gross margin. And this has also happened because we chose to do where we will do business. We chose to, walk away from categories. So we have shut down a loss-making power cable business that was doing close to 90 crores 6 years back. We have shut down, agricultural pump business that was doing 40 crores 5 years back. So last 5-6 years, we have also restructured a lot of our portfolio to have a sharper focus. What does it mean is that yes, year on year you will not see such great revenue growth, but our business is very healthy and we are more sharper focused, and it gives us bandwidth to go after categories that are of better margin profile. Ram, you want to supplement?
Yeah, couple of things. So I think, we have to see the macros also. So, if you broadly look at the macros, see the nominal growth, which used to be at around 14% has dropped to about 8 to 9%. That's on one side. On the other side, if you look at the last 4 years, significant part of this growth has happened on e-commerce and organized trade. Yeah. I think we have been, late to, enter e-commerce and organized trade on one side. The other side is, while the nominal growth is almost, come down by, 40%, the part of the remaining growth has gone into, organized trade and e-commerce. In the remaining part of the market, a lot of people have entered, which is what Mithun has been talking about, right?
And mainly we have been focusing on the traditional trade, as a company, and if this macro is understood, I think the performance would seem as strong and as good. Okay, because when 30-40% of the growth is happening outside the area that you focus, right, and you've not participated in that adequately. Because as Nitin said, right, last 2 years we've been working on building capability, and we are now pretty happy now that we have the right, what I would say, we are in the right place to, scale up, and therefore, because it required a lot of preparation. So that's one context I would like to bring to your notice, right? Second thing, I would like to say is, post the GMON and DST, right? The companies which were, we used to be an outsourcing company. Yeah, most of our business was outsourced. So when we moved from outsourcing to manufacturing, right? Our competitiveness got impacted to the extent of about 4%. So we, that was the outsourcing, gave us the advantage to be able to compete with people who had, strong and deep market positions, and which is why you will see now that progressively in the last 3-4 years, we have gone in for insourcing manufacturing to the company. Yeah. So I think, this period is also a period, where we have, overcome this challenge, where we lost this competitiveness, and, and we were able to restore our margins and, hold, and improve our margins in this environment, because it meant that, relatively, we have to, improve our price positioning in the marketplace. Yeah. 4% is a huge impact. Yeah, that's the second thing. The third thing is we've been focusing on making sure that we are able to generate and convert our profitability into real cash. Yeah, and you would see that you will see that in our books today. And you will also see that much of the capex investment that has happened, where we've set up 5-6 factories over this period, 4 or 5 factories over this period, and some of them are work in progress. This is a consequence of our ability to generate cash in the business. Yeah. So our focus has been fundamentally to make our business strong and robust. Make sure that we become healthy and our gross margins are protected and improved. I think we have improved our gross margin to the extent of around 6 to 8% over the last 5 to 6 years. Half of it has gone back into the business in terms of investment, right? To meet the cost on people that we have added and the investment that we have made on the technology side, right? So we are putting money back into the business so that we become strong and we become competitive. Yeah. So we have invested in manufacturing capability and R&D and product design and development. Yeah, and the fruit of this will be visible over a period of time, right? So
thanks. This is very detailed and candid as well. Just a quick one, if I may, on the margin front, EBITDA margin front, any aspirations that you have? I've seen your gross margins have seen a very smart improvement last year. Any targets, and also if you could indicate what is the price differential in the non-South region now, which you used to indicate earlier, anything on that front?
See, we had earlier stated that we would like to hit 10% and then improve 0.5% EBITDA every year. But this is at a time when, sales were at a normal run rate. Today sales were, the quarter gone by 60% of what it should have been. So it's very difficult to say that. So the gross margin will get converted into EBITDA margin the moment, sales at 80 to 90% of the, usual business. And which I think it has happened in, the month of June, and we are hoping that it can happen going forward. That's as far as the EBITDA margin is concerned. What was the second one?
Trying to understand the pricing differential that you used to talk about in the non-South.
We now don't have much of price positioning difference between South and non-South. We have kind of normalized. I would say it's very negligible. Sudarshan, you want to add anything to this?
Yeah, the prices of South and non-South more or less are the same. There could be some tactical schemes here and there that we run, but otherwise there's not much difference to speak about.
For example, there are some markets in non-South which mirror our margins in South, or probably better.
And
in terms of gross and EBITDA. Yeah.
Thanks.
Thank you. The next question is from the line of Charanjit Singh from DSP Mutual Fund. Please go ahead.
Yeah. Hello, sir.
Yes.
Thanks for the opportunity. So, sir, in terms of now, you talked about market share changes which you would have seen over the last couple of months, and now also in this recent quarter. So, you can highlight any major segments that you would have lost or gained share, or region-wise we would have seen the intensity much more significant in any particular product segment. If you can give color on that aspect.
Ram, you want to take this?
No, you mean last couple of quarters? I think nothing particular. I think from time to time we see aggression in different categories. Yeah. So we have we've seen more intense activity in stabilizers. Sometimes we are seeing it in water heaters. Yeah. But before that, sometimes we saw in wires. Sometimes it's geographic. Yeah. But usually what happens is, then of course, we of course try to protect our interest, yeah, but invariably that comes with a lag. So I think these are some, these are the major categories where, which have, impact on us, and, where, we have witnessed these kind of issues, and usually it is geographic. Yeah, I mean, in one or two strong pockets, we see this coming up. But it takes, once we sense that, it's getting strong, I think, we react and, but then, we lose some time in the process. Yeah.
Okay.
But nothing, sustainable.
I think, let me answer it in this way. We decided that we will not buy market share by giving discounts. So let me put it that way. Okay.
Okay.
So we block. So what happens is, we block. So we will block, if we find that, the, action of someone is hurting us, so we will block that in that place. Yeah. But then in that place. Yeah. Yeah.
Okay. And sir, in the last, couple of quarters, we have been, working on our product portfolio, upgrading it, more feature-rich, products, and now with the COVID scenario and a lot of fears in terms of downtrading and the kind of, sales which are happening. So how do you see the reaction to our product portfolio, which could be more feature-rich and more, towards the profitable segments which we had moved earlier?
So we have completely revamped our NPD process, and we have a very, very clear strategy in place. It follows from the automotive strategy of standardization, simplification, and platformization. So the chassis will be the same. The bells and whistles we can add. So if someone doesn't want the bells and whistles, we can remove and sell it at a lower price. So this gives us the flexibility to create, a platform and then make it into a super premium product or a super economy product, as the case may be.
Okay. And so lastly, on the channel mix front now, how is our channel mix, e-commerce versus wholesaler driven or direct distribution? How is the mix, and how do you see now with a lot of technology investments which you have done, do you think that channel mix can change in the favor of e-commerce significantly? And which product segments are you seeing more traction on the e-commerce platforms? And how is the pricing differential in that? Yeah.
So Ram, you want to take this?
Yeah. So I think you can look at it at company level or related category level. I say related category because if you eliminate some categories like wires, switches, switchgears, pumps, right? These are not e-commerce friendly categories. But otherwise, at a company level, we would be at maybe 2 to 3%, closer to 3%, and at related category level, we will be about 5 to 6% today. Yeah? But this is growing fast because the fundamentals are in place, and we have tested that over the last 2 years. Yeah? And as we are able to bring more offerings in, we expect to see traction. Obviously, the traction will be more in categories, where, we have historical strength. So typically you will see a stabilizer, a water heater, getting a fan or, kitchen, getting, good traction. Yeah. So I think obviously in order of, our strength in the different categories. Yeah.
Okay. And sir, in terms of wholesaler versus
So we are not generally wholesale focused. So mainly, mainly we have been, focused on, direct dealing and distribution. Yeah. And what we are doing now is, we have been able to build a foundation for e-com. And we will be focusing on, growing our business in e-com and organized trade. So that's going to be our focus going forward. Yeah. And we are working towards that. Yeah. So that's a huge opportunity that's available to us, which we could not participate when the business shift happened about 3 to 4 years back, as we took time to, build our internal capabilities. Yeah.
Thank you. Currently, we would request you to please come back in the question queue as we have several participants waiting for their turn. The next question is from the line of Manish Agarwal from Easybuy. Please go ahead.
Hi, so just one couple of questions from my end. Firstly, is there some fatigue at the dealer channel level, basically where they are not willing to keep, high inventories? Like maybe if they're carrying 30 to 40 days of inventory, now they were kind of not willing to take more than 15, 20 days of inventory. Are you seeing something like that happening?
Ram, you want to take this?
Yeah. The channel is operating on lower than normal inventory because, there is still uncertainty that is visible. So in general, the inventory has come down over a period of time. Yeah. And, the regular stocking, that one would typically see is not visible today. Right? It's also visible in the speed with which, even, cash has come back from the market. Yeah.
Okay. So, is it something to do with any financing arrangement that channels would have of themselves with
I think I think that they have thinned their inventory, and they have thinned their inventory probably because the situation is uncertain, right? And so people are what I would say not stocking too much. And I think mostly, not just us, but all companies are at this stage, they are more busy feeding demand. Because I think that, if everybody were to push sales, I am not sure supply will keep pace. Okay, if you're looking at, because the supplier, although factories are open, many of them are operating at 50 to 60%, manpower, is what we are observing. I'm talking about raw material, packaging material and stuff like that. And some of these are periodically going into containment and coming back after a week or a fortnight and stuff like that also. So all these things we are observing, and therefore, what we feel is, it will take some more time, before things will normalize. And I think, maybe, a couple of months down the line, we would be in a better position to, develop a point of view on this. I think right now, people are not, are just buying hand to mouth. So what we are observing is, we get a more even sale through the month, right? So, and, practically, we are getting flat sales, every day through the month. This is something we have never seen before, because in the past, it would be more sale towards the month end. But now it's more even right through the month, right?
Okay.
And it's replenishment.
Thank you, sir.
There is no urgency to buy on a first or a second or a third or a fourth, right? But typically what we see is, we see almost the same number, running right through the month.
Okay. So the demand pattern has changed, or channel's demand pattern has also changed, we can say.
No, I think that they are just, buying to requirement, right?
Yeah. So I think, earlier what was happening was they were having 45 days of inventory, and during the month that they will negotiate and then they will buy more, as a bulk volume. But now they're buying 25% each week or 20% each week. Yeah.
Okay. Thanks, sir. That was very good.
Thank you. The next question is from the line of Prashant Kuti from Sundaram Mutual Fund. Please go ahead.
Thank you for the opportunity, sir. So firstly, the first question is in terms of, you just spoke about even before COVID, there was a lot of competition which kind of entered the market and probably would not want to respond to it. But just want to ask, is the overall landscape itself changing? So because you're also hearing a lot of strong players also entering into a lot of these markets, be it appliances market or be it for that matter kitchen appliances, or for that matter switch gears, lighting and so on and so forth. So is the competitive landscape even more severe as compared to what it was thought by you earlier, and any changes in strategy which you would like to make on account of that?
See, what will happen is when, like I said, after Demon and GST, when there was a crash in the GDP growth rates in the country. Every company was, not the core categories were growing at 4-5%. So obviously, it doesn't look nice to show 4-5% growth. So everyone decided to get into every category. Usually companies give it 5 to 7 years. After making losses for 5 to 7 years, they usually shut it down. So that will start now.
Okay. I think also, right, I think, we could see this, so from our point of view, right, so we could see this phenomena coming up. So immediately after, GST, a couple of things became very clear to us. One is the hyper competition became very clear to us. And the second thing that became clear to us that, companies, which had sourcing based model, we are losing advantage. Okay. And there are two kind of issues that happen for us, because invariably into a category, you rely on the capability of the supplier. So the ability to differentiate your offerings is weak. Okay. And second thing is, of course, as I said, there is, for us at least, we could see a, clear, 3.5 to 4%, gross margin, erosion, relative gross margin erosion happening, because of GST coming in. Because the larger companies which were manufacturing, they could have some advantages. And, so based on that, we, about 2 years back, we have reset our strategy. And we are walking that path, and I think some part of the dividends you would have seen this year in terms of margin growth. Yeah, and our priority initially is to be fit for growth. Being fit for growth means making sure that your business has the right margin structure. Yeah, and is churning sufficient amount of cash so that we can invest back into our business. Yeah, so that's our focus, and we are running business with that. Mind. I think that's what Mithun was trying to say earlier.
I was one more point to make is when like if you say if the period of growth, if there is a strong growth happening in the country, it is much more easier to get into a new category and grow than in a recessionary kind of an environment like what it's today. So in a very when market is growing at 15%. Market leaders may not even notice that their share is getting lost. But whereas when market growth is 5%, for you to grow, literally someone has to degrow. So that's when the hyper competition starts. So I think now the Indian companies would have realized that it's not easy to enter new categories. It's a long-term haul. So probably the only serious players will remain. Of course, someone will launch and then they will drop price by 20-30% and get some share and all that. But then how long you will do this? You will do it for 3 years, 4 years. After that, eventually you will have to somehow think about making money out of it, right?
Okay. And my second question is, given the current environment you spoke about, that even channel is probably not really liquid. Well, it could be a short-term phenomenon, but you said the channel is also being a very more agile in terms of stocking inventory as well. In this period, are we also looking at probably cutting off some of those low churn products for us, or probably any of those low churn categories for us? Anything on the product front which we're trying to do that probably focus on certain categories, and which would they be, if I may ask? So anything on that front, if you could take on that.
So see, we did not wait for a COVID attack to start doing this. Like I said, we stopped LT cable in 2018. We stopped agricultural farming last year. So we are not afraid to admit mistakes and shut it down, because if ROC for a product is not happening, if the strategic value of the product is not there to the company, we will shut it down. We have no problems in disclosing it. We have no problems in taking the hit. We have written off an entire plant of some 20 crore, which is LT cable, that was done about 3 years back. So as a company, we are not afraid to do these things, and we'll continue to do it, whether there is COVID or no COVID.
Okay. Sure. Thank you very much, and all the very best to you.
Thank you. The next question is from the line of Santosh Yelapu from Ashika Stock Broking. Please go ahead.
Thank you for the opportunity. I had a couple of questions. First, sir, what are the challenges we see going forward to roll out the new products and also addition of the dealers or distributors across the non-South markets in FY21 and 22? And the second question is, sir, in the consumer durables segment, we with just 80 crores kind of a top line, we did a segment level loss of almost 8-9 crores. This is somewhat a repetition of a mix we had seen in Q1 FY18. Could you throw some colors that despite new breakfast appliance launches, why we saw this kind of a loss?
So first of all, the challenges, of course, India is, whatever said and done, we have video conferencing and all that. But in India, business is still done the old way. They prefer meeting face to face, especially retailers. They are, a specific stereotype that they really believe in, meeting face to face. So this, as long as this face to face meeting and, product launch functions and tours and all those don't happen, it is always going to be slightly challenging to go to a new dealer. I mean, you can't just call up a new dealer on the phone and say, can you be my dealer? I mean, so that's going to be one task. But however, we hope that there is some, vaccine, that is coming in our way, and then, probably our sales team can, restart travel. We have to also keep in mind that right now retailers are also scared. They don't want any company representatives coming into their store, because if one of the retailers catches this, then he has to also shut down the store and all kinds of stuff happens. So retailers are also very scared to allow company people to, come into their store. So most of the business gets done on salesforce.com and video conferencing and phone calls and all that. So that is definitely one of the challenge. What was the second question?
Sir, the consumer durable segment.
Sorry, consumer durable.
Can I?
Yeah, you want to take it?
Yeah. See, see this last quarter, as you said, it's more like 45-50 days of sale. Okay. A mature category where we have higher market share and, significant volume to market scale. Obviously, the profitability will be better and, you will see a better health, even, on a lower volume. Okay. But, many of the consumer durable categories, right, either, you have a AC, you have a water heater which is off season. Okay. Or, you had, air cooler, which was, just getting out of season. Okay. So that's on one side, and on the other side you have kitchen and other products, right? These are products that we have entered in the last 3 to 4 years. Okay. Obviously they are going to have fixed costs, associated with entry into these categories. Yeah. And therefore the break-even point, in this case will be, much higher as opposed to break-even point in a mature company. So as you can see, we've done about 58% and, we've been able to, be profitable. Yeah. But probably, when you will, break the number by segment, you will find that, maybe, the break-even point in the mature categories is about 40-42%. And the break-even point in the emerging categories will be about 60-70%, because they have still not achieved the scale, commensurate with the investment that has gone in, both at the back end and the front end, in terms of manpower and, other resources like R&D resources. So I think, you have to see it in that light. Yeah. I hope that's clear.
Yes, sir. Thank you.
Yeah.
Thank you. The next question is from the line of Achal Lohade from JM Financial. Please go ahead.
Hi, thank you for the opportunity. What I wanted to check was in terms of the festival season. Now, given our product portfolio, how important is the festival season for us in general, especially for the South market?
See, so this year Onam will be the first festival. So once Onam is over, we can tell you how it was. See, please understand that these are not normal times. It's kind of like a world war is happening or something like that. So people are not really in a mood to go, celebrate festivals. I mean, people are not even able to get out of their own house, forget festivals. So I don't think they are in a mental frame to really do it. Go and splurge money and all that. What people are doing is, something is breaking down in the house, they're replacing it. We see a lot of demand for TV stabilizers, because a lot of TV is getting sold, because now TV is the only source of entertainment for every person. We also see that a lot of demand for UPS systems because everyone is working from home. All the schools are school children are studying from home. So at any cost, the router should not go off. That's a key ask by all households. So if you look at Kerala Onam, I mean the TV sales is one of the biggest ones, and I think Onam TV sales should be decent not because people want to go and buy TV because of Onam, but because TV is the only source of entertainment. So maybe any number of TV is not enough because you're sitting at home all the time, right? So I think the behavior will change like that. I think the need. So what behavior we saw last year, in terms of people going and buying stuff on auspicious day and all that will change into a need-based buying. I mean, if I need a TV, I'll buy it. If I need a UPS or an inverter, I will buy it. If I need a router, I will buy it. If I'm doing some renovation, I will complete it, etc., etc. It won't be that, because it's Onam, I will go buy some clothes and then I will buy some gifts and all that. I don't know whether that will happen this year, but we will have to wait and see. But definitely, we can see that there is increased demand for televisions. There is increased demand for dishwashing, appliances, vacuum cleaners, etc. So we have stabilizers for dishwashers and microwave ovens. So we expect all these to do well. So that's my primarily expectation. Ram, you want to add anything to this?
Yeah, I think pretty much what you said. I think my sense would be that I think we should not analyze this situation too much, because whatever numbers are coming, right, they are a consequence of what I would say demand supply challenges of various companies. Yeah, they are a consequence of what I would say essential purchases being made by people, right? So I think unless the COVID scenario changes, this picture is going to change. I think our industry is in that way it looks like we are more fortunate than some other industries that demand has not hit us so hard, because we are still able to post lockdown able to do 80-85% as you saw the last 2 months. Yeah, and we think that we should be able to do that in the coming 2-3 months for sure. Yeah. So I think we should not analyze this too much, and I think we should we should wait and watch. Yeah, I don't see any companies taking an aggressive posture and making investments, because we don't know. Because see, the number of people who are taking calls, right, on how future will be, that has increased, right? So see, every district authority is an independent authority and is authorized and empowered to take steps and measures as may be required to safeguard the people in that area. So a lot of the local decisions are getting made, and so we have there is no certainty to say how things will go. Therefore, I would say I think that we should wait and watch, and I think this is a passing phase, and we should not spend too much time analyzing this, because anybody who is making a prediction is speculating, right? And that's what we are observing. Because if you take Kerala, we were in a good shape in Kerala, and now look at what's happening, right? The cases are much more, and this is in spite and despite the efforts, right? So I think there is a lot of uncertainty still associated with this, and would be good to watch. Yeah?
So one more point on that. I think the key thing to watch is number of cases per district, because definitely when the cases do drop in a particular district or an area, people do feel confident and they go and spend. So I think the best way to judge how things will go is keep analyzing that, and that is one lens. I don't think festive demand is going to be a key consideration this year, because see, the festive demand is a hype created by all companies by advertisements. I mean, the kind of money all the durable companies spend during Onam and Diwali is huge. I don't know whether this year they are in a financial position to do that. And even if they do that and after 1 week they realize the entire country goes to lockdown, what do you do with the money you spend? So these are the questions that are staring us in the face. And then, that's why we can't really make an answer now.
Got it. And just the second question, in terms of the inorganic, I know these times are trying times. We've been, looking at or considering inorganic opportunity. So given the current context, are you, keen on doing, or you think this is now kind of pushed by at least couple of years in terms of any acquisition, etc.?
I wouldn't say a couple of years, but definitely a couple of quarters. I think we have been fortunate to have, targets that have been engaging with us. And we have been fortunate to, mutually agree to keep it on, the deep freezer or the back burner, as we call it. I don't think we require 2 years. I think by January, we'll be in a position to.
Got it. This is very helpful. Thank you so much.
Thank you. We would request the participants to please press star and 1 to ask a question. As there are no further questions, I would now like to hand the conference over to Mr. Hitesh Tong.
Thank you, Aisha. Thank you, sir, for your comments and insights, sir. Is there any closing remarks, sir? Sir?
No closing remarks. Thank you, ICICI, for hosting this call, and let's hope that we can overcome this pandemic. And everyone, please stay safe and listen to your local authorities. Thank you.
Thank you, sir.
Thank you.
Please subscribe and press the bell icon to never miss another update. Please like, share and comment.